Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, so today a couple economic things happened. The first thing was that the Chairman Powell and the Fed raised interest rates,
Okay.
short-term rates, 0.25%, right? Not mortgage rates.
Mm-hmm.
And then why did he do that?
Because he's mean.
He's
No.
super mean.
I'm kidding.
He's just trying to be mean.
No, I'm kidding. No, look, he's really concerned. He was criticized, remember, at the beginning for not acting fast enough to quell inflation. So now he's acting out of an abundance of caution while looking at the employment numbers, while looking at the pace of rising wages, and all of those are giving him concern that inflation is not under control, that this is kind of a head fake on the inflation, and he wants to make sure that inflation remains under control because inflation is bad for everybody, and particularly for people toward the bottom of the economic scale because goods and services are more expensive when inflation is high.
Okay, so obviously the job numbers were outstanding, over 200,000 jobs created. Labor rates have risen, wages have risen 4.4%, I think, was the annual year over year. So he says, hey, the economy's still too hot. We went from 9% to like 3% inflation. Anyway, so there was this Bankrate article that came out that we're going to just kind of go through some of the things here because, and I apologize, this is still in the crash vein, but we're going to not talk about the crash. We're talking about the economic situation. So if you're an economics geek, then you're going to love this. We're putting on our economist's hat today. And so you have to subscribe to get all our other geeky videos that we do with a bunch of data and random stuff. So anyway, this is what the experts are saying about what is potentially happening right now with regard to housing. Okay, after a record-breaking run that saw mortgage rates plunge to all-time lows and home prices soared to new highs. We're going to address that in a second. The U.S. housing market finally started slowing in late 2022. Mortgage companies engaged in mass layoffs. Real estate economists lamented a housing recession and home prices seem poised for a correction. Oana, we had home prices soared to new highs in 2022, but we're actually in most markets it's higher.
It is. So, yeah. But remember, that was a very rapid increase in home prices, and then we kind of took a breather in the fall, and then we were kind of off the races starting at the beginning of the year in January, which we kind of sort of thought that might happen because, of course, it was springtime and that sort of thing. But year over year, we are doing really well, and most of the housing markets are up. Now, all of this is driven by the lack of inventory. So, we can certainly touch on that a little bit. So we can touch on, there's a lack of inventory, which is causing properties that are attractive to buyers to get their asking price and even multiple offers. There aren't a lot of homes on the market, so that's a lot of what's going on. Builders haven't really, they never really ramped up again after the Great Recession. So they are behind on building. And even if they wanted to build, they couldn't because, of course, regulatory hurdles are, part of life. So it takes a while to get permits to get everything spooled up to build. So between that and between them being cautious because they got hurt during the Great Recession, you've got that piece which means that there are less new homes being built, more households being created. So again, you've got supply and demand where you've got more demand than supply.
Here's another quote. But a strange thing happened on the way to the forum. Actually, the housing crash. Home values started rising again. Mm-hmm. In fact, home prices have increased for 3 months in a row according to the latest Case-Shiller Home Price Index. Couple things here. When we had 3% interest rates 18 months ago, median home prices were like at $380 or something. And now they're at like $430. Mm-hmm. But we have interest rates are 6.7% or something. Something else that's interesting, we should do a whole video on it, but I was going through a ton of data, and I found the projection for new home construction for the next 3 years. Mm-hmm. 2024 is projected to be lower than 23, and 2025 is projected to be lower than 2024 for the number of homes built. Home builders are having a hard time with permitting. acquiring land, and then putting the whole thing together. So a lot of builders have basically said, we're just going to back off on some home building for the next couple of years.
It sounds like it's more necessity rather than choice on their part, because they can't get the land, they can't get the permits and that sort of thing.
Right. Yeah, exactly. Okay. Yes, home values were down compared to April 2022, but only by a mere 0.2%. Isn't that something? 0.2%. In other words, the housing boom might be over, but this pause in the real estate market isn't shaping up as a crash. I want you to think about this way. When the Fed tries to affect the economy, they don't really have good ways to affect they kind of have to throw a blanket. It's like you're putting out a bunch of fires. You throw one blanket over all the fires. You can't go take out a big fire and take an extinguisher to it, right? Like housing or jobs or employment or something like that. You can't do that, right, Juana? So to some extent, interest rates didn't crash the market. It just stopped it from going up at 19% a year.
Right.
Isn't that a better way to think about it?
It is. Interest rates were simply meant to put the brakes on. They were never meant to crash the market. So what we anticipate for the rest of 2023 is basically what I've said from the beginning of the year, which is a kind of a plateau, a leveling, a kind of ho-hum, nothing really particularly exciting. Of course, unless you're the buyer out there who's having to compete with multiple offers, you may feel differently. But overall, the market is just going to be pretty lackluster.
Having another quote. Now bidding wars have returned and inventories remain frustratingly tight. Juan and I are personally very well aware of that, having tried to buy a couple of houses here recently. You're not going to see home prices decline, says Rick Arvielo, head of mortgage firm New American Funding. There's just not enough inventory. There's not enough inventory. Supply and demand.
Right.
It's really what's driving this. It's interest rates. The other thing, too, is remember this. When the number of transactions are low, like we really do want a lot of transactions. This is why. For real estate, people that are in real estate in the profession, it's more deals. The more deals you do, the more money you make. That was why I always thought it was funny when people said, oh, you must have hated doing real estate during the housing crash. It's like, oh my God, we sold like 600-700 bank-owned homes a year. And yeah, home prices were going down, but we didn't care. We were making 3%. So it's like not like if a home price goes down, you somehow don't make money or you lose money. The real estate agent never loses money in the deal. You always make money because you get a piece of the deal every time. So for us, more transactions is always better, no matter whether home prices go up or not. I always thought that was funny when people say, oh, real estate, guys must have made a killing last year. Well, yeah, but it would have been better if the home market went down. That doesn't make any sense. Yeah, it does for us, though, because there'd be more deals. Okay.
Right.
All right. So now we're going to go through the 5 reasons. These are the 5 comparisons to 2008.
Okay.
We're going to bust through these really quick. Okay. And I'll read the things that Wanda, you're going to provide the color commentary.
That's me.
Okay. You're Brent Musburger, and I'm doing play-by-play. You're doing color commentary. Okay. Inventories are still very low. NAR says there's only a 3-month supply. Okay.
So a healthy market is a 5 to 6 month supply. 3-month supply is really tight, not enough inventory. And of course, we've got a lot more people interested in purchasing than we have inventory.
Okay. It was at 1.7 at one point, but that was artificial. Okay. A year ago.
Right.
Okay. 2, builders didn't build enough to meet demand. Home builders pulled back after the last crash. They never fully ramped up to pre-2007 levels. Now there's no way for them to buy land and win regulatory approvals quick enough to quench demand. And I just gave the numbers, the number of homes being built. I think it was 1.4 million this year, permits pulled, 1.3, 1.2 in 2025.
Right.
And Juana, what's that could do to housing prices?
Supply and demand, folks. So we're going to have more people next year than this year, more people the following year than this year, and less brand new houses being built, more people in a position to purchase. So that whole supply and demand thing tells you that home prices are certainly in new construction probably going to go up because there will be less new construction and more buyers willing and able to purchase.
We're going to be adding 4 to 5 million people to our economy in the next 2 years. And we're decreasing by 100,000 for the next 2 years, the number of new homes that we're building. It's not enough. It's not enough to meet demand. Okay, demographic trends are creating new buyers. There's strong demand for homes on many fronts. Many Americans who already own homes decide during the pandemic they need bigger places, especially with the rise of work from home. Millennials are a huge group in their prime buying years, and Hispanics are a young, growing demographic keen on home ownership. You went to NAREP conference.
I did.
And that's a huge thing. They gave some number like there was a 30% number, like the number of home buyers in the next 20 years is going to increase by 30% just because of Hispanics that are immigrating to the U.S.
Well, it's not just that they're immigrating, but it's also that they are second generation. They are, they're educated. They have good incomes. They're ready for home ownership, and home ownership is very important in the Hispanic community. I think this is something that might be lost on some people. Immigrants and children of immigrants tend to really be very focused on home ownership.
Children of immigrants?
Because...
Oh, no, you're an immigrant.
I'm an immigrant.
You're an immigrant.
Yes.
And you're a child. You're a child of immigrants.
Yes.
And you're an immigrant.
Yes. So, and I think that just has to do with wanting to belong, and there are all kinds of psychological reasons for that. But there are also financial reasons, because they're very driven, they're ambitious, and they want to do well. And they're still part of that thought process of surpassing the previous generation and improving their lot in life.
Oana and I are both speaking at the national conference, the national conference for NAREP. This is the National Association of Hispanic Real Estate Professionals. Mm-hmm. We're invited to speak a couple days on panels. Oana is speaking as the CEO of Referral Cloud tech startup.
You will not be hearing me speak in Spanish, however.
No, it's all in English. The whole conference is done in English. It's fantastic. We did the one last year in San Diego. It was absolutely fantastic. Yes. Okay. Lending standards remain strict. In 2007, liar loans, which borrowers didn't need to document income, were common. People were getting loans without no credit history, no down payment. The whole thing was a mess. The median credit score for mortgage borrowers was like 635 or something?
It was somewhere in the 600s. Currently, it's more like 765. So that gives you an idea that it's over 100 points higher now than it was, what precipitated the Great Recession. So these borrowers and these homeowners are far better qualified. They have great credit. They're fiscally responsible. They're probably more financially literate, and they have a great deal more equity in their homes. So that brings, again, stability to the market. Much less likely that there will be some sort of a negative event that causes the home to be in distress.
Okay, foreclosure activity is muted. I'm going to stick the video right here. We just did the video. In the years after the housing crash, millions of foreclosures flooded the housing market, depressing prices. There were only 168,000 filings in the first 6 months of the year.
No, that's
filings.
That's
only,
national.
National. Only about 20 to 30,000 of those nationally will actually hit the thing, and there were millions during the housing crash. So there's literally, the number of foreclosures is literally the lowest it's been since they've been measuring, right?
Right, and you have to keep in mind that we were expecting maybe higher numbers because, of course, during the pandemic, foreclosures were put on hold. So we were expecting maybe there would be some catch-up going on. But even with the catch-up, the number of foreclosures is still extremely low.
We did a video where we grabbed all the data for all the people who are behind during the pandemic, and by the end of 2021, 97% of everybody who had missed a payment was either fully caught up or had renegotiated the terms of their deal, with 97%. So when you saw those numbers about people missing payments and people thought, oh my gosh, this is going to crash housing market, all these foreclosures are getting ready to hit. You never heard on the news about the 97% of people who they just got caught up, because all of a sudden they're like, oh, wait a minute, I got my job back and home prices are skyrocketing. and I could refi at 2.5%. Hey, I'm good. I'm gonna make this thing work. Isn't that what really happened? I mean, we
Right.
know a ton of people who refied houses now, refied at a super low rate, and they're never leaving the house.
Right. Yeah.
Okay. All right.
Okay. So
That was the whole thing.
okay. The other thing that the article talked about was that over 80% of people with loans out there have sub 5% fixed rate loans. And remember, 42% are owned free and clear, so that means that 58% have, that out of those 58%, something like 86% of them have sub 5% loans. So look, homes, if you are a homeowner, chances are that your home mortgage payment is reasonable and affordable and something that you're going to hang on to for a long time. It doesn't apply to everyone, but it applies to most people. And those rates are fixed. So you've got that for 30 years. So enjoy.
Inflation's going to make it go, be nothing at some point in the future.
So, and Todd's right. With inflation, that that mortgage payment will be more like a car payment before too long. So it's going to help you, and you're going to get to build wealth. And that's a good thing. That's part of the American dream.
Yeah.
So we hope you enjoyed the video. Hope you got something out of it. Please leave us comments. You don't have to agree with us. We welcome all your viewpoints. Please be nice to one another in the comments. Subscribe, like the video, share the video, hit the notification bell so you get the next great video. And we'll see you on the next video. Bye.
Bye.